And welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is an amazing way for you to exit highly appreciated assets, defer capital gains tax, so you can create and preserve more wealth, or help your clients, friends, and family do the same. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their deal stories, ideas, inspiration, so we can create, we can learn from their wisdom, and then so we can also create and preserve more wealth. I'm also streaming, or we're also streaming right now on Expert CRE Secrets as well, and I'm excited about our next guest. He's out of Boise, Idaho, but originally from the California area. And if you've ever been frustrated and worried about that Wall Street and the financial planners who are telling you to take a risk for a better return, yet it doesn't seem to be working, maybe it's time to look for what our guest is going to bring today. He has tremendous experience with Wall Street, background in financial planning, mutual funds, securities, packaged securities, but he went through the Wall Street roller coaster with himself and a lot of his clients. And now he's here to talk to us about a better way. Please welcome to the show with me, Dan Thompson. Dan, how you doing?
Good. How you doing, Brett? Good to have you, or good to be with you today.
Yeah, I'm doing fantastic. And it's great to have you as well. And by the way, you can learn more about Dan by going to his Wise Money Tools YouTube channel, or wisemoneytools.com. But Dan, before we get started on beating the tax man, which is the title and the episode focus today, would you give us a little bit more about your story and your current focus?
Yeah. So I something about money was always intriguing to me. When I remember this story when I was 15, I was sitting in the back seat. My dad, and he had a buddy that he was talking to. My dad never made any money. Sadly, he worked really hard, just never got anywhere. We lived just very meager meager lifestyle. But this guy that he was sitting with was a very wealthy guy, and the guy's name was Dave. He said that he made $30,000 that month in the stock market. And I'm 15 years old, and I'm working for $2 an hour for a landscaper, and I'm calculating real quick. Okay, that's going to take me like 6 years to make $30,000, and this guy does it in a month. So really, from about that moment on, I was committed. I just said, somehow I either got to be a stockbroker, I got to be in the money game, because I don't want to just live like a poor guy my whole life. So when I got into my early 20s, I went around and begged a bunch of firms to hire me, and finally one did. And I promised them. I said, no one will work harder than me, and I'll be, a great success for you. Well, they hired me, and it was interesting because I was the hardest working guy. I was in the office by myself so many nights. But after 18 months, I realized that being independent and being able to offer more opportunities for my clients was even better. So I ended up leaving that firm after 18 months, opened my own offices. I had 5 offices and 60 reps around the area. And then just as the markets ebb and flow and up and down, after the dot-com boom and bust of the 90s, I just had to find a better way. So I kind of went on a hunt and just looked at everything and came up with some really good tools to use and strategies that can really help people out to build their wealth, to grow their wealth, to do it tax advantaged, and to do it a lot safer than the typical Wall Street way.
Excellent, Dan. I appreciate you sharing that. And I believe we've all been given certain gifts, Dan, and these gifts have been given to us to be a blessing and help to others. So if you were to go back, to those younger years when you were just getting started, or even just now, what do you feel like your gifts are, and how do those help how you help and bless people today?
I think if I have a gift, it's just being able to explain things simple enough that whether you're a very seasoned, high net worth, wealthy person, or you're just kind of getting started in life, understanding just some very basic concepts. I wrote a book recently. It's just a simple book. If it takes you longer than an hour or hour and a half to read, something's wrong. It's just the 4 keys to building wealth. And that just, again, I think I've got the gift of just explaining things easy enough so that people can understand them, and then easy enough to implement them.
Excellent. So, making complex simple, and then helping people to implement them. Let's dive right into the topic at hand with that in mind, which is beating the tax man. So, Dan Thompson, what is the number one secret to beating the tax man?
Well, what we like to do is start with a foundational investment tool, if you will. And what we do is we pack life insurance policies with as much cash value as the companies will let us have. That's our biggest battle every week, is really just getting the companies to let us put in as much as our clients would like to. And then what we do from there is we want to leverage that, and we want to leverage that into other assets, typically income producing assets and tax advantaged assets. This can be real estate, equipment leasing. Back in the day, we were able to do some conservation easements. Those got wiped out this last year. And then you can even leverage within the life. You can just leverage on leverage on leverage. And the whole idea is to build this bubble, if you will, of growing your money in a tax-free environment, living on tax-free income, and then passing your assets onto your heirs tax-free as well.
Excellent. So it sounds like the number one secret to building, beating the tax man is having a foundational investment tool of which you can then leverage into real estate or other things that are tax advantage, and you can live off tax-free income. Is that a fair summary so far?
Fair summary.
Excellent. And you mentioned conservation easements being wiped out. What do you mean by that?
Well, last year was the last year you could do them. So we did quite a few of them, but then this year the government, for their wisdom and their great foresight, decided to take them off the table this year.
Excellent. So let's move into secret number two. Once you've figured out the foundational investment tool and you've leveraged and you're getting the tax-free income, what's the next secret to beating the tax man, Dan?
So again, getting into assets that have some opportunity to write off taxes. I'll just, as everybody knows, real estate can be one of those assets when you use leverage on, let's just say, a multifamily project. You've got 150 units. There's some huge depreciation there, and it can not only wipe out the cash flow, the taxable cash flow, I should say, but it can even carry forward for taxes that you may be paying for years to come. So that's a great depreciation asset.
Absolutely, yeah. Multifamily is a great way to do that with cost segregation and bonus depreciation. And we call that tax flow, right, to offset the cash flow, which is so important as taxes go higher, and your cash flow might be going higher. You want to have an offset on the other side. And so, are you finding those that are your clients, the people that you work with, they're leveraging I guess the life insurance policies to buy the 150 units and doing that cost seg and kind of putting that all together in a picture? How does that look?
Yeah, usually we'll just use the life insurance as the down payment, and then we'll still use bank financing for the majority of it. But yeah, we want to build that foundational tool of having the access to capital inside the life insurance, because ultimately that's going to also produce tax-free income for them down the road.
Excellent. That's fantastic. So, I'm curious. So now that conservation easements are perhaps out, that you're helping clients with that in the past, or pointing them toward that direction, what are some of the ways that you're helping people with some capital gains tax deferral if and when they do go to exit these assets that have been depreciated, with either cost seg or just straight line? What's the strategy there to defer the capital gains tax?
So there's quite a few things that you can do. I like what you brought up early in your show, and obviously I'm very interested to hear more about that. But also charitable trusts that can be used to put those assets inside of those trusts, and then they can defer or ultimately even eliminate the tax. The other thing that we do is use leverage into equipment leasing using the 179 deduction. That gives you some very, very sizable tax deductions right off the bat. And then those can be carried forward to help offset some capital gains in the future as well.
Let's dive right into that, because that's kind of a new topic here. I guess leverage into equipment leasing. So what does that look like? Let's say someone had a $1 million capital gains tax. How might somebody leverage into equipment leasing? What would be the risks? Maybe some of the returns, and what kind of tax write-off would they get with the Section 179?
Okay, so let's just assume we got $1 million tax. I'm going to do some in my head, so forgive my calculations if they might be off. But let's just say we got $1 million taxable event, capital gain, 15%. So we're going to pay 150,000 in taxes. A good rule of thumb is, here, let me just pull my little quick calculator up here. So if I need to get $150,000 deducted from my taxable income, I'm going to need about a $187,000 tax deduction. And then, so in an equipment leasing world, we can typically get an 80% tax deduction the first year, which means I need to invest about, I need 187,000. Sorry about that. I should have had some.
Maybe about 225, yeah?
Yeah. So if I put a couple $100,000, no, I don't even need that much. If I put about $50,000 into equipment leasing, and that gets a 10x leverage, so that means I'm going to own $500,000 of equipment, and then I'm going to get a $350,000 tax deduction, which at a 50% tax bracket, let's just say, is going to give me about $125,000 in a tax deduction. So that would easily wipe out 150,000 in capital gains.
Okay, so about $50,000, and you're going to leverage that, like kind of like a down payment with the bank, and then that's going to get you $500,000 ability to lease that out, or that equipment, or you bought that equipment, right? And then you're leasing it out, and then you're going to get that write-off. Is that a fair summary?
That's a fair summary.
Okay.
And we've worked with a company that does all the back. I mean, so they do all the leasing, all the maintenance, all the insurance. I mean, they carry the whole project. You literally have to get the 179 deduction. You literally set up your own business. So it's your LLC. Your LLC owns the equipment. They just will take it from there and get it leased out and managed, and maintenance and all that stuff. They have about 11,000 pieces of equipment across the country, and just about every state has a location. And this is typically commercial. I call it big dumb equipment, stuff that lasts years and years, but the depreciation on it's amazing.
This sounds fantastic. And by the way, it kind of reminds me a little bit of oil and gas, right? With some of the benefits there. How would you compare and contrast those two, Dan?
Yeah, the only difference is, oil and gas, I mean, it's becoming more of a science. It used to be, that oil catting was somewhat of a risk as to whether or not they would tap into something. I don't think that risk is quite there. The thing I like about this is that it's a tangible asset. I mean, and it's literally in your name. So that if, push comes to shove, worst comes to worst, you literally could sell this equipment on your own and probably be pretty close to whole, if not much greater than whole, simply because of that tax deduction that you got up front.
Got it. And when does it come back to bite you? Like in an investment real estate, you can 1031 exchange, right? And you can even use the Deferred Sales Trust. When does it come back to bite you on that equipment?
Year 5 in this case, because it's a 5-year, it's a 10-year AM, 5-year balloon, so to speak. So in year 5, they're going to sell the equipment. They're going to sell it for what's owed and the principal you put down. So that's going to be a recapture, but it's a real simple process. All you do is turn around and take your money and do it again, and you're right back in the game. And the guys that we work with, they haven't paid taxes in 10 years and make huge, lots of zeros every year.
Excellent. And then we're also for ordinary income tax, kind of like oil and gas as well as capital gains tax, passive or active? Is there any kind of restrictions on that?
No, well, I'm not sure on the restrictions, but when that comes back to you, it's going to come back as recaptured. So it's going to be ordinary income.
Okay, cool. This is interesting. Well, I think we're learning something new. By the way, you can learn more about all of these Wise Money tools by going to the Wise Money Tools YouTube channel. And this is, you can hear from Dan Thompson as he talks about these types of strategies. Very interesting. I know we've done some business exits that have had some equipment, and depending on, which structure we use, we're also able to defer and move it outside the taxable estate. I'd be curious on the besides just the tax flow, I guess the cash flow during that 5-year term. If I put $50,000 down, am I expected to make anything on my 50 after the debt service? What's the interest rate? Obviously, that's changed with where banks are at, with rates going up about 100% in the past year. So just real quick, any kind of cash flow on that 50,000? What can be expected after expenses?
Yeah, I always tell people about 15% of your of the cash flow based on the amount you put in. So if you put in $100,000, you're going to expect about 15,000 a year, and that should be also depreciated or tax efficient, because there's still some depreciation left in those last 4 years.
Yeah, that's fascinating, and I think it's like anything. Like, people aren't used to like leasing equipment, but if you think through it, and if it's big enough equipment from companies that need it, I'd even imagine it actually got a bump during COVID, right? Like, cars went way up. I bought a gun safe, and that gun safe went up in value. I mean, something that's heavy, manufacture takes a lot of that with supply chain challenges. Did you see that bump there, Dan, during COVID?
Not only that, but what I like about this is it's almost recession proof, because in a recession, companies aren't going to go put out, a $500,000 for a piece of equipment. They're definitely going to lease. So leasing percentages, leasing goes up dramatically in a recession, which is kind of nice.
Yeah. Yeah, I love it. And our foundation of our structure is an installment sale, and so the very fact that people are using other leasing, right, which is really just an installment or a loan, right, to allow somebody to get the equipment, to use the equipment, to pay you back slowly over time, and still get the tax benefits through Section 179. And essentially, by the way, if you're listening, this is why the government does this. Because otherwise, things would stop, right? They can't force us to let someone borrow our equipment, or they can't force us to buy or build multifamily properties, but they can do tax incentives to encourage, through tax write-offs and deductions, and do it all in the beginning. The other thing too is they do the bonus, so they let it all happen in the first year, so that people take action like right now, right? Don't wait, and delay, which keeps the economy moving. So it's all about tax flow, not just cash flow. That being said, Dan, are you ready for the capital gains tax solutions part of the show?
Sure.
All right. What's your biggest frustration when it comes to the 1031 exchange, or just other capital gains tax deferral on assets like public or private stock, businesses, cryptocurrency, real estate? What would you say your biggest frustration with the 1031 is?
Well, I think everybody's got the same problem, and that is that you would have to use a like property and at least as equal or greater value. And sometimes when people are doing 1031s or trying to back out of stuff, they're doing it ultimately to lessen their load of assets. And sometimes that can be the burden.
Yeah, I could agree with you more. We call that the shotgun wedding, Dan, where you're like, hey, I'm ready to move on, or I'm ready to like be done with the toilet trash liability, but now I have to trade something like kind for like kind, which maybe it's probably gonna, if it's real estate, it's not liquid, right, by nature, or you have to give all control into the Delaware statutory trust, right, where you have no control, no liquidity, no diversification, and it has to be equal greater value if you're going to do it yourself and you want to maintain the control. And so you become in this part. It's like, well, do I give up my freedoms with my energy, my time, and my stress, or even trying to get a loan with the bank right now? Not as easy as it used to be, right? And or just the debt is higher interest rates, and cap rates necessarily haven't changed, and it becomes kind of a forced wedding, right? A forced marriage where you're running around with your hair on fire for 45 days and then closing within 180. Just not a great scenario. By the way, that's why we do offer a capital gains tax solution called the Deferred Sales Trust, which eliminates the need for the 1031 exchange, works for any asset of any kind, including cryptocurrency, business, stock, and of course, it can save a failing 1031 as well. You can go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. That being said, Dan, are you ready for the lightning round?
Yeah, look, can I just say one thing on that?
Sure. Yeah.
I think that's awesome, and I've got to get much more involved in that, because my wife, as an example, just inherited a trucking firm, or a trucking terminal. So they have no interest in that. So they're just going to sell it, right? Didn't have any way to 1031 because they don't want to, stay in that space, if you will. And then just the other day, I had a guy call me up, and he's got the same situation. He's been flipping houses, and now he's tired of it, but he's been just 1031, 1031, 1031. And now he's like, I've got to get out of this. The one solution that this equipment leasing does offer is just by taking some of those funds that they have available, they can wipe out a lot of the gains early on as well. So between, I think, what you do and some of the things that we offer, we could probably have some fun helping people avoid that tax.
Absolutely. To beat the tax man, all in a legal way, but do it in a way that it gives you the freedoms that perhaps you're looking for on your exits. Thanks for sharing that, Dan. Appreciate that. That being said, let's jump into the lightning round. So, Dan, what would you say is the one thing, if you could go back to your 25-year-old self, that you would make sure to tell yourself to do?
Oh, I would have done multifamily much earlier. I wish I would have just forgot the Wall Street way, the traditional financial advising, the get a retirement plan, live happily forever after, because it just doesn't happen. It's too frustrating. Markets are too volatile. I would have been in multifamily much earlier.
Absolutely. By the way, Dan was in Modesto, where I was kind of the Bay Area in Sacramento at one point, and same thing here. My parents, they did fix and flip houses in construction, and it had some holds, but mostly just single family in Mission Hills and Silicon Valley and stuff. But looking back, they would have bought multifamily, they would have renovated multifamily, they would have owned it long term because you can scale it. It just makes so much sense. But yeah, that being said, question number 2, what's the number one book you've recommended or gifted the most in the past year?
Well, I still love Rich Dad, Poor Dad. I think that kind of just tells the story of how to do things right. And then, of course, Robert's got a way of just explaining these same concepts that we're talking about: multifamily, leverage, all those things.
Absolutely. Love that book. Question number 3, what's the number one leadership quote or theme that you strive to live by?
Oh, I wish I would have given that a little more thought. But really, what I try to live by is I would have to say it's my 4 keys: time, compounding, leverage, and tax advantages. You put those into effect, and you're going to be just fine.
Excellent. Next question. What are you most curious about right now?
Crypto.
Yep.
I think there's some interesting things going on out there. I wish I had a crystal ball and could tell you which one was going to end up on top, but I think it's a lot like .com, that sooner or later 1 or 2 or 5 or 10 are going to really kind of shine and lead the way, and the rest will fall by the wayside like .com. But it's an interesting arena.
Awesome. All right. Second to last question, really, Dan. So after all your success, helping all the people you've helped create and preserve more wealth, what would you say is the number one thing that you practice to stay centered in your values and also stay encouraged to charge forward to gain higher heights?
Oh, I'd say live well within your means. I would love to see people get to the point where they can save 40% of their income, and not living, on rice and beans, but just having enough assets that are working for you, passive income, and still having a great lifestyle. And I just love the idea of saving 40% of your income.
Fantastic. Dan Thompson, I want to thank you for being on the show. I want to thank you for sharing all your wisdom with us. We learned something new today with leveraging equipment. Really cool as well. I want to encourage you to keep using your strengths, making things simple and helping people take action to build their wealth and their financial freedom. For those who want to get in touch with you, could you remind us one last time what's the best place for us to find you?
Yeah, Wise Money Tools. If you just can remember that, we're on YouTube and Facebook and Instagram and all the rest of them. wisemoneytools.com for the website. You can always reach me at dan@wisemoneytools.com if you have any questions as well.
Amazing. Thanks, Dan. Also, thank our listeners for listening to that episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using proven tax deferral strategies such as the Deferred Sales Trust, maybe getting with Dan to do some equipment leasing to defer or eliminate or offset tax, right? Really cool. It's a great way for you to create and preserve more wealth or help your clients, friends, and family do the same. By the way, we're also streaming on expert CRE secrets as well, for all of our commercial real estate entrepreneurs out there and or investors. Appreciate you listening. We want to encourage you to take some action right now. You can check out my brand new book, Building a Capital Gains Tax Exit Plan. It just got released on Amazon, and you can find that there. We have Kevin Harrington from Shark Tank in the book, another other multifamily syndicators and operators, and also a couple of financial planners as well. Go to capitalgainstaxsolutions.com and or search on Amazon, Building a Capital Gains Tax Exit Plan. Hey, thanks so much for watching. We promise to do even better next time, and we thank you for